Hey, welcome to The Explainer. We're here to break down the day's biggest financial stories and make sense of it all.
All right, so here's what we're going to tackle today. First, we'll look at why the market took a hit. Then, we'll find some surprising winners that actually went up. We'll dig into why tech stocks in particular had such a rough time. And we'll wrap up with something really cool, how big brands are thinking way beyond just selling you stuff.
Okay, first things first, the big story of the day? It was a down day. I mean, a real sea of red across the board. And leading the charge downwards was the NASDAQ. It dropped a hefty 1.7%. That's a pretty big deal because it tells you that a lot of those big, influential tech companies had a really tough day. It wasn't just tech, though. The S&P 500, the one that gives us that great snapshot of the whole market, it was also down a full percent.
And yep, even the Dow, with all its blue-chip giants, couldn't stay out of it. It finished down 0.5%. So no matter where you looked, the story was pretty much the same. Sellers were in control.
But okay, it wasn't all doom and gloom, and this is where things get really interesting. Because even on a day like today, some companies just knocked it out of the park. These are the bright spots we've got to talk about. So check out Lululemon. The stock just soared, up almost 10%. And why? Well, they hit investors with a 1-2 punch of good news. They boosted their financial outlook for the whole year and announced a leadership change. Wall Street loves clarity, and they clearly loved this. All right, now for something that was, well, kind of wild. Let's talk about cannabis stocks. One analyst literally called it an insane day for them. And I mean, look at these numbers. It's just wild. Canopy growth shot up 54%. Tilray jumped 44%. I mean, these are the kind of massive, explosive gains you just don't see every day. So what on earth caused this? Well, this wasn't just random speculation. This was all sparked by some huge news. Word is the administration is looking to reclassify marijuana as a less dangerous drug. That is a potential game changer for the entire industry. And looking ahead a bit, there's another interesting bright spot. One analyst is pointing to the 2026 World Cup and saying, hey, think about all the tourists and all the spending that's going to happen. And who's set to benefit? Fast food spots like Chipotle and Shake Shack. Makes a lot of sense, right? Okay, so let's flip back to the other side of the coin, the reason the markets were down in the first place. And the story here really centers on one sector, tech. Yeah, this chart pretty much says it all. You can see right there, the tech sector was the big anchor dragging everything down with a loss of almost 3%. When you have worries about the economy, these big, growthy tech stocks can get hit pretty hard, and that's exactly what we saw today. So let's peek under the hood. What went wrong? Well, for Oracle, it was a classic real-world problem. They're building these huge data centers for OpenAI, right? But now some of them are delayed because they can't get enough labor and materials. That news sent the stock down 4.5%. It's a great reminder that even in the world of AI, you still need people and parts. And then you've got Broadcom. The CEO basically summed up the mood of the entire market. They have a massive backlog of orders. We're talking $73 billion. But they still wouldn't give a forecast for the year, saying everything's just a moving target. That kind of uncertainty really spooks investors, and the stock had its worst day in months. And Dell got hit hard too. Why? A report came out saying they're about to raise prices. Now, you might think that's good for profits, but investors saw it differently. They're worried it might scare off customers, and boom, the stock dropped more than 6%. Okay, so we've seen the daily ups and downs, right? The news that moves stocks second by second. But now, let's pull back and look at a much bigger, and I think much more fascinating, trend. We're going to talk about how some brands are thinking way beyond the next quarter. You want to see what I mean? Look at what Netflix is doing. They're creating something called Netflix House. They're literally taking over old mall spaces and building these immersive playgrounds where you can hang out in the worlds of your favorite shows. There'll be escape rooms, themed bars. It's a wild idea to bring their digital worlds into our physical one. And then you have a totally different approach from a classic brand, Ralph Lauren. They have been selling a lifestyle for so long that Ralph Lauren Christmas is now a trending aesthetic. It's not about a specific product. It's a whole vibe, a feeling that they've built over decades. And all this kind of leads to one big question, doesn't it? When you see companies like Netflix building actual worlds and brands like Ralph Lauren becoming a cultural mood, you have to wonder, is the story a company tells, the world it creates, becoming even more valuable than the actual thing it sells?